All right, well, thank you all for joining me today. I'm going to be talking about Canadian Payment Methods and Trends 2016 report. This is meant to be a bit of an interactive presentation, so we're going to be relying on the live polling, so hopefully everybody has the app with them and has a little bit of experience doing that. First, just a real quick background about myself. My name is Michael Tompkins. I work for Payments Canada, formerly known as the Canadian Payments Association. I've been there for about 10 years. I've worked in roles in operations teams. I worked for the policy team for about 4 years, and now I work with the research unit. I've been doing this analysis for some time now. We actually started doing it back in 2008, trying to look at strategic research and see where the CPA was sort of positioned in the Canadian marketplace of payments. So far, that work has resulted in 2 publications. We published results in 2012 and then again in 2015. We're working on the new report right now, so we'll be publishing it again in 2016 as we look to move it into more of an annual occurrence. One thing we learned over the years is that the Canadian payments landscape is made up of a lot of disparate payment service providers, and all the payment instruments are sort of scattered about. It's sort of silos of data. So when we try to do a full landscape or get a whole perspective of the Canadian payments marketplace, we have to really reach out and find ways of bring all that different data together. So in my first slide, I'm just going to talk about the methodology, about how we deal with those sort of silos. So obviously, being CPA or Payments Canada, one of the major sources of our data is the ACSS. But that only gives us about half the data information we're looking for. So we do have to go out elsewhere and try to track down the data from other sources. So we've found a few novel approaches to do that. First thing we do is a data sharing exercise with network and payment service providers in Canada. We've established sort of a data sharing where all the providers send data to us. We make our data available. So it's the idea is that we share and cooperate so we can all get a better understanding of the marketplace. We also use consultants and expert input. Sometimes we get data and research that we can't really make a lot of sense of. So we reach out to the experts so we can get the best read on it. A good example is Bank of Canada researchers help us establish the cash numbers. They're obviously some of the foremost cash experts in the country, so it's great to have them to increase our accuracy. And the new piece we added this year that we're pretty excited about is we've got market research now from Ipsos. So now we're getting annual data on about 12,000 Canadian households and their payment habits. So that's adding a whole nother layer and dynamic into this research, so it's getting more depth. So when we put it all together, what instruments are counted? Our general sort of rule of thumb, we're trying to guide us as to what's counted, what's not counted. We want to get at the most common instruments used by Canadian consumers and businesses. And we're trying to bring in the emerging payments where we can, where they make sense to, where they have enough volume to sort of make cast a shadow amongst all these other payments. So some things aren't counted explicitly just because an analysis of this type, they just kind of don't show up. So some key transactions not included, as we have listed here: securities, derivatives transactions and trades, virtual currencies, very important emerging payment. It's not a diss to these products, but it's just they're not showing up in the market research enough to really make a big dent in the analysis. So we just fracture our payment categories too much. We also exclude LVTS transactions, includes a lot out of a scope transactions, and there are a lot of the high value business payments, so they sort of obscure some of the more granular business transaction trends we're trying to look at. Okay, so for the live polling, what I want to do is I want to try to get a sense of our payment habits in the context of the findings. So I have six live poll questions. Actually, it's only 5. One didn't quite make it across through all the handoffs with the different providers that were involved with this. But so I got 5 live polling questions. If you guys want to do those right now, and then we'll just feed them in where they belong in the results, or use them to set the stage for the results. Just get onto the conference app. I always find it easier to navigate through the agenda to find this session. It's called Focus on Research, Canadian Payment Methods and Trends. I'm going to do it too, so we all have a voice on these sort of payment habits. So just go ahead and take all the, do all 5 questions now, and then we'll loop them in where they're relevant to the content. So let's just take a minute now and do that. Everybody knows where the polls tabs are and everything? Once you get into the session, there's 3 menus at the top: details, activity, and polls. Just click the polls and then just select each question one at a time and enter your response. Okay, so I think everybody's just about there. Probably have at least got through this question. It was one of the earlier ones. So I'll move on to live poll question number 1. We're going to talk about the cash question first. And this was, how many payments do you make using cash or coins in a typical week? There's some kind of weird breakdowns of the numbers there, but they'll make sense when I explain it in a moment. Okay, so this is a pretty big number here for option A, 0 cash during the course of the week. I'm gonna kind of benchmark against the market research, which of course is a more diverse group of respondents, or reflecting rural, students, retirees, so probably a little bit more diverse than this group, demographically speaking. So they only 2% of them indicated 0 cash being used during the week. So we've got 28% here, so quite a bit ahead of the curve, it would seem. And we can also look at the heavy cash users here. More than 15. It's actually, my screen's blocked. 0. That's pretty good. The market research, only about 7% would fall in this more than 15 or heavy cash user category, I would describe them. And the majority are in the 1 to 7 category in the market research at about 80%. And we got about 63% here. So good alignment there, but we're ahead of the curve on cash reduction and not using a lot of cash. So let's take a look at the check data on the next live poll question and see how that works out for this group versus the market research. So what is the total value of checks that your household pays in a typical month? Again, we have a 0 option there, which will be interesting. And then we've got the option to look at sort of the high users or high value users for checks. Let's wait for those results. And there they are. So 38% using 0 checks per month. That's actually really interesting. That actually lines up perfectly with the market research, which came up with the same number, 38%. I was not expecting that. For our heavy or high value check users, 2% in the room, 5% for Canadians more generally. So pretty good alignment on that trend. The other one was that the market research was 45% make up to $500 in check payments per month. So our group here, 44%. So almost perfect alignment with the market research. So that's pretty good validation of that question anyways. So according to market research, I imagine we line up really well with this group. 1.5 checks written per month at approximately $400. So that would seem to line up pretty well given these data breakdowns. Okay, so let's see how these sort of paper transactions are stacking up against the electronic payments and the trends that are been coming on that we hear a lot in the news, payments news anyways. The paper forms of payment are still on top, at least the way we break it down in these 2 distinct environments. We'll look at it in terms of the point of sale and remote transactions. Point of sale, we describe as being whether you're in a physical merchant location or a virtual merchant location. That means if you're on their webpage. So we're trying to capture that e-commerce element of it as well and considering that as a point of sale environment. The point of sale transactions obviously are made primarily to merchants, so they account for most of the volume that we're seeing. I'm going to bring up some data points here. So the big difference between, I know it's a little bit of a gray area between what a remote payment might be, because you are going to use a computer or a mobile device for that, versus what is a point of sale payment made on a computer or mobile device. And basically the way we break it down is that point of sale involves being at the physical or virtual domain of the payee. So kind of simple to do it that way. That way we can stack up 2 very distinct payment environments. So as I said before, the point of sale environment accounts for the majority of volume, as they account for most of the consumer volume of purchases. And the point of sale changes we're seeing are driven by demands for convenience, speed, and rewards. And we're seeing more transactions moving to the online and contactless channels. Cash is still on top, but you can see from these trend lines, it's being negatively impacted by these trends. On the remote transaction side, now we're talking about transactions that are sent without a need to be in close proximity with the payee, whether it's their physical or virtual domain. Now, remote transactions involve payer instructions sent to an intermediary, such as a financial institution or a payment service provider, and they basically, behind the scenes or on the back end, send the funds over to the payee. Common examples include checks, online banking, online bill payments, and pre-authorized debits. So bring up some of the data points there. Now, these account for most of the transaction value that we find in the Canadian payments market, and most of these are commercial, i.e. government or business transactions. And these changes are driven by different demands. Demands for utility, usefulness, versatility, convenience and remittance information, and the provision of payment information. So we're seeing EFT growth here, online transfer growth. I'll define that term later. Check volume is declining, but we're seeing check value still growing. I'm going to discuss both these environments in a little more detail a little bit later. But first, I'll set up the point of sale trends with a couple of our live poll questions. So we'll do live poll question number 3. Which statement best describes your use of contactless payments? We're talking about tap to pay, whether it's mobile or card. Then we're just looking at frequent user, occasional user, or non-user. Just give that a moment for the results to pop up. And there they are. A lot of frequent users here. Again, I think we're a little ahead of the curve on some of these emerging channels. Frequent user 66%, I think it settled on. It was 67 a second ago. We compare that to the market research respondents, which is only about 23%. So we're maybe early adopters here. Again, a lot of differences when we consider us versus the market research. Not so many rural folks, I suspect, here. A little bit more urban areas where you're going to have the point of sale contactless devices available for you. The survey respondents, 45% of them said they were occasional users. So only 14 here because we have so many at the frequent user category. And a big 33% are non-users from the market research as opposed to our 18% here. So we're, again, just part of reflection on our demographics and the fact that we're kind of payment professionals and we like exciting new payments. So I'll move ahead to the next polling question now. And this one's going to be, does your primary credit card offer rewards? We're talking about points, miles, cash back, any other reward for its use. And it's just a simple yes, no, or not applicable. Is that the missing question, Michael? It's coming? Okay. Okay, so there it is. Oh, wait, no, we just looked at that. We're going after the credit card rewards question. Does your primary credit card offer points, miles, cash back, or other rewards? That's question number 4. Well, I'll talk a bit about the market research before we get our live poll data uploaded. 75% of primary credit cards held by Canadians have or offer some sort of reward incentive. So it's a pretty high number. It's easy to see how that's driving some of the trends that we're going to talk about next. So obviously only 25% don't offer that, which actually seems kind of high considering most of the people I know in the credit cards I'm familiar with. Yeah, this is kind of a number I would expect. 96% are using these rewards cards. So you can see where the incentives are for some of the point of sale habits I'm going to talk about next. So I'll just move on then. Okay. Two big stories at the point of sale, of course, as we've alluded to already, is the declining use of cash and this payment card evolution that's going on. Point of sale cash use is only 2/3 of the volume it was back in 2008. So it used to be 60%, it's down to 40%. So quite a lot of downward pressure there. Consumers are obviously being drawn to these convenient and speedy payment options such as contactless, and increasingly the instruments that they can use in online environments and with their mobile applications. Today that, of course, is the payment cards, which includes debit, credit, and prepaid, which now combine for 60% of the point-of-sale transactions. And as we can see in Figure 1, contactless is expanding pretty significantly over the last year or two. We have it growing by 70% in 2015. So now we're up to 1.2 billion transactions, which is quite high. Debit card growth in the contactless space has been a major reason for that. And they're still experiencing growth on the credit card side as well. Credit cards still make up the majority of these transactions, though. On the e-commerce point-of-sale environment, we're moving into what we're calling a hyper-convenient space here now, where you've got the online merchants and the mobile applications saving all that information for your address, information you need to make the transactions quick and easy. Some examples, we all have examples, I'm sure, but I'll give a couple quick ones. Sport Check and Amazon online, keep your address, all the needed information to enable the transaction, credit card information, credit card number. So it's enabling purchases in 1 or 2 clicks or points with your finger. Another one I like is the Uber app, which is pretty fascinating in that you can arrange for a ride to the location where you're standing with a single click, and the payment and everything takes place behind the scenes. Another one we found that's pretty interesting is the Joey Restaurant app, which is allowing customers to pay for their restaurant meal when they're in the restaurant just by entering a code into the mobile app. So there's no need to bring out a point-of-sale reader. The credit card's already behind the scenes, held in the app. So again, just allowing for convenience and speed for consumers. And so through transactions like that in the e-commerce space, we see about 20% growth in 2015 to almost $30 billion worth of transactions in that space. There's no options to use cash here, of course, so that's another thing that's putting downward pressure on our cash use. Credit cards dominate the channel, which you can see there in Figure 2, with over 90% of the e-com transactions in 2015. This chart kind of tells the story. As I've pretty much described, credit cards have just evolved to become very versatile in both the physical merchant locations and in the online space. So obviously the growth is continuing. It's about 5% year-over-year value growth in 2015. The market research suggests 2 important reasons why, and one is a little surprising. The first is, well, it's not surprising when I put it this way, convenience. Of course, it's convenient to use your credit card. But what I mean by that is it's a payment. It's being used as a payment tool as opposed to a means to borrow money, which I think runs a little bit counterintuitive to what some people think. And we saw some evidence for that in the market research, where we saw the total spend on credit cards going up by 30% since 2011, but the actual balances carried forward are down by 30%. So another number that reflected that was that 2/3 are now paying their balances off every month. So clearly, credit cards are benefiting from just making themselves available in these convenient e-commerce applications that people want to use. And of course, the other side of that is the reward card aspect, with 75% of primary cards giving rewards across Canada, 96% in this room. It's pretty easy to see the link between that convenience and that reward enabling this credit card dominance at the point of sale. Okay, next I'm going to set up a couple live poll questions in the remote payment environment to set up the trends there. So the next question is going to be about bill payments and what proportion of your bill payments. This didn't translate into the question, but examples, utilities and credit card bills that are paid through online or mobile banking services. So we have a few, there they are, a few, about half. So let's just hone in on C and D here. So most and nearly all, 90% in this room. That's very high. That actually lines up very well with the research again, where it suggests about 90% of bill payments are being done electronically, with the online banking channel sort of dominating. So that's very good alignment with the market research. Another key remote transaction, which I think made its way in at the last second, this was the missing survey question regarding person-to-person payments. So we'll talk about that next. And we're talking about the online transfers here. So e-transfer, Venmo, PayPal, I think the examples didn't make it through to the questions on the live poll, but hopefully you guys are able to understand what was meant by the term by online transfer. Pretty much we're talking about anything but cash or checks here. So we'll wait for the results. And there they are. So I'll just hone in on C and D again for most or nearly all. So we're up to what we're gaining. Latecomers. So getting up around 50%, which is a pretty healthy number for payments that are relatively new, and there was probably a little bit of uncertainty around the term online transfer. Now, we didn't actually have very good market research to sort of validate this number, so I'm not going to compare that to the market research. I will talk about how fast this segment is growing on the next slide. But it provides a great example of what we're talking about in these remote transactions. So again, we're just talking about we're using an intermediary, an FI or a payment service provider to, behind the scenes, get that payment over to the payee on a payer's behalf. And these transactions make up the vast majority of Canadian payment value. So on the next slide, I'm going to talk about some of the remote transactions that are important, which are checks, these online payment service provider payments, and EFT, which I want to get into a little bit more detail on. So EFT includes some of today's most convenient and commonly used electronic payments. These are the online bill payments we talked about on our live poll question, direct deposits, how we get paid every week or month, and pre-authorized debits, how we're paying our mortgages and cars directly out of our bank accounts. And again, these are transactions where the payers and payees, or it seems anyways from the research that the needs for the payers and payees are relatively met pretty well in terms of the payment information, the speed and the timing of them. So it seems like they're well served with current payment instruments. EFT has had the biggest impact on remote transactions by far. In 2015, EFT accounted for the 76% of remote transactions and 50% of all the remote transaction value, as you can see in the chart there. But checks are still an important segment as well. While the volume is declining, it's now down to about 24% of remote transactions. Check value is on the rise. So it's holding the checks proportion of payments steady and growing in some cases. So what's happening is there's fewer checks being written, but they're being written for higher amounts, and our evidence for that is we're obviously seeing the total value increasing, but we're also watching the average transaction size of checks, and in 2015 it was $4,500 per check, up from $2,500 in 2008. So we want to dig in a little bit and find out, well, what's going on there. So we took a look at the consumer side to see if that provides some answers. But when we look at chart 2, we see there's 3 times the value of consumer EFT and online transfers being made as checks. Consumer check use was about 250 million items, worth about $100 billion, so still quite significant. But consumers are predominantly using EFT for paying their bills, and they're using the online transfers for their electronic P2P payments, which are growing by 45% per year, and we have that estimated at, in 2015, being about $50 billion worth of payments now. So that doesn't explain the growth in the check value that we're seeing. So when we look at the commercial transaction size, you can see on chart 3 there, they're nearly evenly split between EFT and checks. There's only about $200 billion that separates those two segments. So we get a little more granular. Government EFT is growing, we know, due to their efforts to reduce checks. Commercial EFT growth is growing slowly for B2B and B2C transactions. But we're still seeing that commercial use of checks still moving a growing value of transactions, which now accounts for 90% of the total value of checks, or about $3.5 trillion. So what we're looking at here is these high values that are probably speaking to just high value checks, such as for paying suppliers or real estate transactions that seem to be contributing to this expanding commercial check segment. And some of the reasons we looked at in the research, commercial checks are used as sort of an all-purpose transaction. They're accepted by virtually everyone. And as I'm sure everyone here knows, they can be provided with invoices and accompanying payment information and documents for transactions, which does leave behind a key e-payment gap to fill the needs for that remittance information, that convenient reconciliation, and that document trail. So in conclusion, as we start to discuss features for modernized systems in Canada, this research supports two areas. It shows that consumers are drawn to more convenient and speedier instruments. The point of sale is a very good example of that. Just that the contactless and single-click transactions are quickly gaining favor. Also, consumer adoption of the online transfers are also indicative of consumer preferences for speed and convenience. But on the commercial side, we see a sticking point for electronic payment growth. That value of checks signals a gap in the electronic instruments for these higher value commercial transactions. So what that leads us to suggest is that the modernized payment systems that are able to facilitate instruments that will support these two areas have the greatest potential to impact Canadian payments. So that's all I have for you. I'll now open up the floor to any questions. Yeah.
Showed the growth contact taken off in the last, I guess, couple of years. The introduction of tap and go, flash, and now we're mobile payments with Apple Pay and stuff like that. Now bringing it on. What if we? How does that growth compare to the decline? Has that been like? Do you have any net growth patterns in terms of like are they just cannibalizing?
Yeah, it's a good question.
So
Yeah.
Is there a growth in has it driven a growth in electronic payments?
Yeah, it certainly is. Oh, sure. Yeah, the essence of his question was, is the contactless growth sort of net new? Is it cannibalizing? If I'm capturing the essence of your question, yeah. So what we see is, payments generally are growing organically, at least the ones that we're able to trace. Now, admittedly, cash is a hard one to wrap your mind around, and it can get away from you in the data pretty easily. But generally over the years, I've been looking at this analysis. About 2% a year is what you see, just general payments growth. So anything beyond that, you're starting to take payments from somewhere else. So definitely contactless is, the evidence shows it's probably cannibalizing mostly cash. And then what you're getting is sort of a tug of war between debit and credit within that channel. Any other questions? All right. Thank you very much.